SwissBorg is the official partner of my channel where you can buy, sell, hold and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. We're going to look at oil now then, because oil's been my favourite trading tool throughout the whole of September and continues to be that. Stocks and crypto have been pretty lame and they generally just point down. The only thing that I felt relatively strongly about really is shorting the euro, shorting the pound and getting the long positions on oil. Now, it's been a decent week, and I was saying to the people on the Patreon, who are interested in doing derivatives on oil, I said, look, if you are going to do derivatives, try not to use loads of leverage, because really, the target from the bottom to the top in itself is 37%. You do a simple 1x leverage or at 2, and you're still looking at 37% with just a simple 1x. This is a volatile asset. We're used to that in crypto, but oil is in many ways it's the new crypto, isn't it? Really, if you think about the moves, volatility is what we want. We want also something that you can trade appropriately. So yeah, we got the top. That's where we were talking about the everything bounce. We said get out. Well, not short, but don't bother with commodities anymore. It's all about the stocks. Stocks did their rally for about 2 months. We called it the everything bounce, and then there seemed to have been a reshuffling. Now, oil had been kept down by the strong dollar. The strong dollar still is a bit of an issue for commodities as a whole. Look at precious metals, they're not having a good time, they're not ready to rally at this point now. It's still a matter of being in cash really, but oil is a different story. So oil started to move up again from this trend line of this falling wedge, and finally broke out based upon the TA, but also helped up and out of the formation because of OPEC plus, and they're going to limit the supply, so less supply, same demand for the moment at least. Anyway, they're expecting lower demand, and that will naturally come with higher prices, which we will receive. So what they're doing is they're front running the expectation of less demand, which will come. But for the moment, it's a futures game. So let's turn on some of these indicators, as I've already exited this trade last week, and I'm looking for a new entry point. So I appreciate my indicators are a bit noisy for people. So there's only one real thing to think about on this weekly, which is your 21 exponential. It's this grey line here. So on the way up, we found support after the first initial major consolidation, bang, and a second one here, third one here, Bollinger Band as well, and then here. And this is where we chose to break down from it, and we found ourselves getting rejections from it. 1, 2, 3, and now a rejection from it once again, and we're below it. So far, again, this is a weekly, we're looking at everything here on a weekly, so far holding up on this 10 exponential. Now this also is backed up by the daily 50 exponential, so it's a decent support so far, decent support coming in roughly around 88.75. This is US oil, so it's not Brent or crude, it's US oil, so just bear that in mind. It's the better chart to trade oil on, generally speaking. But we could also be coming down for a little further on a deeper retest of the 4 hourly, which is a little bit further down. So we're talking about 86.8, or maybe the 50 simple 86.4. So further downside in the very short term for anyone who's looking for an appropriate entry point. It's really not that far from where we are right now. But again, if you're using loads of leverage, it could potentially be quite a lot. So 87 to 86 kind of areas where we'll be looking for this to get picked up, and then move back up towards into the 90s to the holy grail of around about 100, and about 104, 105 really. So we can turn all this noise off now. So I know that the indicators aren't for everyone. Turn all this noise off. On a horizontal basis, we can also see a reason for a rejection around there. You've got tops, you've got supports. There's a fair bit of stuff going on around here. Between 93.5 or 93.50 and 105, there's really not much. It's going to go straight there. So what we're looking for is another opportunity to try longing oil. Again, tight stop losses will be required because it is volatile and it's subject to all kinds of stuff that might take place within the news, including a strong dollar. Strong dollar will still have an impact on oil. But generally speaking, if you're looking to make a trade like this, you want to try and do it as close to an area of support as possible, because it won't take long to know that you were wrong if it goes down further. I've made that mistake all the way down here, you know, tried to long each one of these. Obviously taking profit on the way up as well, should I say on the way back down again. But the trick is to establish your support before you make that entry. Just because we expect it to go back up to 105 and maybe even onto a new all-time high from there, doesn't mean you should get sloppy with entry points. We're talking futures here. Now, obviously, if you're doing a 1x, it's your, you know, you've got a fair bit of wiggle room there. But if you're not, then you really do want to try and get in at the best point possible. You could obviously try it here if you wanted to, but me personally, I'll be waiting for a little deeper of a retest on this one, especially with the CPI coming out. I'm not looking to make a trade on this today or tomorrow. I really think that the CPI is required. It will give us a bit of an idea of the, you know, what's left in the market once the volatility has subsided. But generally speaking, I'm very much interested in taking more positions in on oil when the time is right. It's been a very decent trade last week. And yielded a very decent move. Obviously, that was a 20% move from that area over there. I mean, you times that by 10, obviously, he was looking at 200% gain there. So, decent move. Now, I'll be looking to do the same thing again if and when we approach this this 87 to $87 barrel area. I'll be looking to do the same thing all over again. Anyway, it is the only trading chart that I'm comfortable with at the moment. Everything else looks like a pile of rubbish. Crypto stocks, the lot. I'm not particularly interested. Oil is the main thing for me right now. While I'm basically sitting in cash, waiting to deploy that cash in the form of a crash, whether it's traditional markets, crypto, or both, which most likely will be. Right, I'll leave it with you there. Thank you for watching. Hope you have a nice day. Take it easy.